Cardano's ADA has found support on its upward trend line yesterday, rallying up towards its 50 simple day moving average. However, this is turning into an area of resistance, so all eyes are on ADA as it looks for a potential breakout or breakdown. Guys, let's roll that intro and get right down into it. Hi and welcome back to the channel. My name is Nick and today we are discussing the technical analysis of Cardano's ADA, given my short-term price predictions for Cardano. As I get into today's video, guys, smash that like button. Let's see if we can hit 500 likes on today's video. Really do appreciate that. If you're new, welcome, subscribe and stay up to date with everything that we do here at 𝗕𝗘𝗪𝗏𝗍. So let's jump right down into this video then. So here we have Cardano's ADA paired up with USDT. We're on the 1-day Binance chart and you can see we had our upward trend line here. This is something that started out on the 13th. We got close to testing it on the 1st of May, tested it on the 14th of May, well, actually 13th, 14th, and 15th of May, and most recently we tested it on the 2nd of June and 3rd of June before rallying back up. Now, what's really interesting here is that we can see that there are a few areas of resistance. Okay, we did rally up to our 200-day EMA, get rejected from there. We came down and tested out the 50 simple day moving average, the yellow line, and we tested this a couple of times. You can see over here on the 27th of May we got rejected. We got rejected yesterday on this one on the 3rd of June, and today we're also testing it out as well. So at the moment, Cardano's ADA is kind of one of those critical moments. It's either going to break out and head up towards its 200-day EMA, or it's going to break on down and head down towards our targeted range between 39.96 and 41.29. So what is it that we're looking for, right? Here, obviously, we're going to be looking for the potential for breakouts, right? And to do that, what we're going to do is we're going to look at our 50 simple day moving average. And if we close a candle up here, we're going to go ahead and go long on this one. Stop loss lower than the previous swing low, and we'll target out the 200-day EMA. Now, this is not going to be the best risk-reward ratio, so we may need to adjust the stop loss accordingly. We'd want to have something that was higher than 1.5. So you know, we have good risk reward balancing. Essentially, you'd get $1.50 for every $1 of risk, right? Here at the moment, you can see this would be approximately 1.32, so it's a little bit short of our ideal 1.5, and we don't tend to want to do anything lower than 1.5. So we might have to adjust things as time progresses to see whether or not we go a lot higher in terms of how high the price could potentially push, or alternatively, lower that stop loss or higher that stop loss in this case, to get a risk reward ratio that would make more sense. But obviously, you open yourself up to risk in that. So we want to be a little bit cautious. The other way of doing this is, of course, we get rejected here and we do close a bearish candle. And if that's the case, then we're going to go short on the market and we're going to put the stop loss just above the 50 simple day moving average. We'd probably give it a little bit of breathing room. I'd probably try to target out that previous swing high, and then we'll target out that 41 cent area, that 41.29. It's going to give you a risk reward ratio of about 2.24. So again, better risk reward ratios all over the short position. Okay, and what we're waiting for is we're just waiting for confirmation of which one of those we want to be going for. Go short or go long, right? That's going to be your short-term trades, right? So we want to know what's going on with this particular area. Now, from an Elliott wave theory point of view, and for anyone who is like spot swing trading, that kind of stuff, this is unfortunately has a potential to be an Elliott wave triangle. Now, if I find some empty spaces right just over here, Elliott wave triangles are known as A, B, C, D, and E. That was really badly drawn. Let me try and draw that in a more accurate way. It would look like this, right? And if I draw a couple of trend lines, you can see you'd have the lower highs and you have the higher lows, and it's a triangle pattern like this. That is kind of what we see going on right here for Cardano. We have an A wave up, a B wave down, a C wave up, a D wave down, and we're looking for that potential E wave. Now, triangles like this, wherever that E wave lands, right here, if E is at the top, the next big move is a break down, and if E is at the bottom, then your next move will be a break to the upside, right? And let me draw that the opposite way around so you guys can see what I mean. Okay, so you'd have your A, B, C, D, E, right? And you'd have that breakout to the upside. Now, in the case of Cardano here, we are, of course, tracking this as an A wave up, B wave down, C wave up, D wave down, E wave up, meaning that we have the break down to the downside, looking for that 39.96 to 41.29. The only thing here is that E waves are incredibly unpredictable, right? They can sometimes overextend outside of the triangle, and that's because an E wave internally can be many different patterns. So understanding that you're in a triangle like this is very important when it comes to Elliott wave theory, and being able to map the internal workings of an E wave is incredibly powerful, because when you exit out of an E wave, you typically end up going out of it in a 5-wave fashion. What do I mean by that? Well, let me show you what I mean. So we have our triangle, which will be, you know, A, B, C, D, and E. Okay, the internal workings on all of these are a 3-wave here, WXY or ABC. I'm just going to use WXY for the purpose of today's video. Here you can see 3 waves coming down. We have 3 waves that would then go up. I followed this by another 3-wave move to the downside. Now, it's possible that the E wave is also a 3-wave movement, but it's also possible that it's not, well, no, an E wave itself, sorry, should be a 3-wave movement, and when you come out of the E wave, you sometimes find yourself in a 5-wave impulsive breakdown. Okay, and so when it comes to Elliott wave theory and where we currently find ourselves, these triangles can only appear in 2 places, right? You'd have your you actually grab hold of this properly. You have a 5-wave move like this. A triangle can appear in a wave 4 position, okay, just over here, okay, can appear in a wave 4. It cannot appear anywhere else in a 5-wave pattern, only the wave 4, okay. Then, of course, you have your A, B, and C patterns, right? And if this is the case, well, then a triangle can only appear in your B wave, okay. These are the only 2 places that you can ever find an Elliott wave triangle, wave 4 or B wave, right? So knowing this means that if we are in fact tracking a triangle pattern, it means that everything else that's going on for Cardano here is either a wave 4 or is a wave B. Now, taking a look at this, we can see that we have a wave 4 situation going on here, and we're looking for that next break to the downside, of which, of course, this is actually all a wave 3, wave 4. Okay, so to kind of put that into context, you have yourself this 5-wave breakdown. You then have a 1, 2, 3. All of this is a wave 4. That would be a wave 5 that then takes you down into those lower ranges and so forth. And that breakdown actually is deeper than I first initially kind of thought. It would be more towards 33.83 to 37.49, following on from the previous videos that we spoke about. Okay, so I'm only talking about these things on a macro scale just so that you guys are fully aware of what's going on when it comes to Cardano. Now, Cardano can, of course, break out of this pattern. And, you know, we could potentially see invalidation of those ideas. That happens, right, at 55.93 or higher, meaning that the price action of Cardano has to go up and rally higher than 55.93, this dashed line that you see on the chart here. Okay, should that happen, it will invalidate the idea of moves to the downside. The sentiment has changed and shifted, okay? Very important that we understand these fundamental basics of Elliott wave theory, because if we can't get those things right, then of course, you know, there's no point in doing Elliott wave theory. So for the most part, this is where we're tracking, right? And it's looking pretty decent. From our stochastic RSIs, here you can see plenty of upward daily momentum available to us, but also we can acknowledge that should the market want to reverse on us, it absolutely can. Stochastic RSIs are not an indication of price movement. They are only an indication of momentum behind the price action. And here we have plenty of momentum to take us up higher should the sentiment want to do so. Now, if I take off that and throw on the divergence indicator, we're lower than the 50 level. We can also see here that we are actually in lower highs on the relative strength index, the yellow line. Now, this is important as we start to think about where price currently is. At the moment, this isn't awful. It's not the worst position, but we might start to see some divergences if we're not careful here. So just be aware of those things as well. If we take the divergence indicator off and throw on the volume profiles, you can see that volume has been decreasing quite a bit in this triangle. This is pretty typical. But most recently, since we started to have this correction to the downside, you can see that volume was decreasing during this moment, and you can see that as price was decreasing. Okay, that shows you strength. It shows that there's a lack of selling appetite. Okay, so interesting to kind of keep an eye on these things as well. Okay, cool. So what about smart money concepts? Well, smart money concepts puts us in a bearish pattern. So we are still looking for breaks to the downside on a macro scale. However, on the smaller time frames, we do see actually more bullish patterns rather than bearish ones. So this is a case of expecting more volatility. We don't think we're done seeing the volatility just yet. We have a weak low indicating that we are likely to see more slippage to the downside for Cardano. I don't think any of that has really changed any. So for the most part, I do think we're likely to see a bit of a move to the downside for Cardano before we actually start to continue this run to the upside. On a weekly time frame, and I've been through this many times before, if we do see this slippage down more towards 30 to 37 cents, this is going to hopefully also have a rally in the middle. This will allow us to basically see a wave 2 out of a fantastic 5-wave movement. This is how early we are in a bullish market for altcoins, and not a lot of people really appreciate this, right? But you can see that this is a tracked a 5-wave move to the upside, and what we're currently tracking right now is the idea of a wave 2. That there could then be followed up by a very explosive bullish market out towards the $5.34 to $12, bit of a correction, and then finally a move up in that final 5th wave movement. Okay, this is an incredibly bullish pattern, and it would mirror that of what happened back in 2020 to 2021, and basically would complete a bigger ABC pattern. All in all, that there would be the end of the bullish market for Cardano, in my opinion. Anything above $10, in my opinion, is really what we're aiming for here. Obviously, there is the potential to go up significantly higher towards $38, but I think that's incredibly unlikely unless absolutely everything goes right for Cardano's ADA in the coming months. You can let me know what your thoughts are on all of this in the comments down below. Do you agree? Do you disagree? Let me know if you found it useful. Smash the like button if you're new, subscribe, and if you haven't checked this video out, what are you doing? Check it out, guys, and let me know what you think.